Good morning. My name is Jane Morgan and thank you for joining the Bigtincan Holdings Limited Full Year 2021 Results Webinar. Today I am joined by Bigtincan co-founder and CEO David Keane and Chief Operating Officer Vivian Stewart, who will present and discuss the full year 2021 results with a question and answer session to follow. David, I'll hand over to you.
Thank you, Jane. And yes, welcome all to Bigtincan Holdings FY21 results call. My name is David Keane, the CEO and co-founder of Bigtincan, and yes, joined here today by Vivian Stewart, Bigtincan's Chief Operating Officer. Now, let me first start by saying that Cyril D'Souza, Bigtincan's Head of Finance, who would normally be with me here today, is unwell and won't be joining us today, so I'll be giving his remarks. Now, for the call today, we'll be using the FY21 full year results deck that was uploaded to the ASX this morning and is also available on our website, investor.bigtincan.com. And a recording of this event will be made available on the ASX and on our investor website after the conclusion of this event. More data on results is also available in the Appendix 4E, also uploaded to the ASX this morning. Now, we have a lot to get through today. This is our most detailed full year results set yet. But before we begin reviewing the results in detail, I'd like to provide some remarks about our progress and the year. You know, FY21 was in some ways a tale of two halves, or maybe you could even say three quarters. The first half of FY21 was eventful, of course, with the impact of the pandemic hitting the Northern Hemisphere full on, with the US election happening and other events that are close to the hearts of every human in Bigtincan, with the social justice campaigns that remain very much a part of our lives today. And this was a period where the Bigtincan team focused on our existing customers. And we are showing the results of that focus today with a strong period of expansion growth in FY21. As we sit here today at the end of FY21, we can start to think about that period post-March, where certainly here in the USA, and in some ways, the world became more normal, but not really normal. We believe that the transition to remote work and digital engagement has accelerated our economy and driven our customers to embrace Bigtincan solutions more than ever before. Now, against this challenging environment, the company achieved a great deal in FY21, and let's talk about some of the highlights. So Bigtincan continued on our growth path with key metrics growing strongly, including our annualized recurring revenue growth of 48% over last year. And that includes 15.1 million in new organic ARR from both new logo and expansion. That's a company record. Retention at 89%, consistent with the previous year through that COVID time. Subscription revenue up 44%, and lifetime value, which we see as a key metric in understanding SaaS companies, at 376 million. And it was an efficient year with growth year with LTV to CAC at 3.5. Now, on cash flow, the company reported strong cash receipts, especially strong given the multi-year payments received in FY20, with the seasonally strong second and fourth quarters showing the benefits of our enterprise customer base. And whilst, yes, the company did record a loss in FY21 to achieve these results, we also performed well as a business, with adjusted EBITDA improving 10% to around -$6 million. Now, during FY21, Bigtincan proved that our software was critical to our customers, with ongoing wins, with new logos, and growth in existing customer deployments. We also conducted 4 acquisitions, adding technology, people, and vertical market expertise to the company. And for those who attended and read our materials on the Brainshark acquisition, you'll note that FY21 put the company in a position to get going in FY22 with around $100 million in ARR together with Brainshark. We updated and promoted our vision of creating the buying experience of the future across our business and into the market, and something that all our people are rallying around. And it is those people that really count at Bigtincan. You know, with 50% of our team dedicated to product development and innovation, I really want to send a personal thank you to all the Bigtincan team members around the world who really delivered for our customers and for each other in FY21. So overall, FY21 was a successful year in the development of Bigtincan towards achieving our vision of creating that buying experience of the future for the world's leading customers. Now, let's review the results in detail. And to do that, I'm going to share the presentation deck, and we'll use the slides as our guide. Okay, So agenda, slide 2. So we'll start today with a business and market update, including the company's performance in FY21. We'll then look at the market itself we operate in, look at the finance and some of the detailed financial results. We will talk about that Brainshark deal and why we think that is an important deal for us going into FY22, and we'll cover FY22 outlook. Let's jump to slide 3. So for those who are new to Bigtincan, Bigtincan is an enterprise software as a service or SaaS company. That means that we make software that is used by enterprise organizations, traditionally larger companies and businesses. They purchase that software on a per user per month recurring revenue license basis. We have more than 1,000 customer deployments around the world, including 40 of the Fortune 500 and over 500,000 licensed users. We have an established business in North America, and I'm talking to you from our office here in Boston, Massachusetts. I'm in a growing business in European markets. We achieved a strong growth in FY21 with 53.1 million in annualized recurring revenue at the end of June. And that's important that we were able to surpass that previous guidance that we'd given to the market of the top end of the $49 to $53 million mark. And that represents 48% year-on-year ARR growth. And overall, Bigtincan solutions are used in a variety of industries to provide a complete solution to empower folks to create that buying experience of the future. We're one of the few providers that offers all of the core capabilities needed: content, training and coaching, automation, and engagement. And our track record of growth shows the company is able to take advantage of our organic growth engine combined with M&A that brings new technology, people, and skills to the business. In terms of results, let's turn to slide 4, which is the results dashboard. I talked about a few of these things: ARR at 53.1, revenue 43.9, right at the top of our previously issued guidance, retention constant at 89%, subscription revenue up 44%, LTV up 45%. So just pleasing progression in the company as we continue to see our customers turning to Bigtincan as a real provider of that technology that makes a difference for their customer-facing teams. And on slide 5, financial progression, you can see some of that progression here over time as the company's continued to grow that annualized recurring revenue and also achieve strong unit economics and SaaS metrics. I talked about it in the introductory remarks, but yes, it was an efficient year for the company with improved adjusted EBITDA up 10% from the previous year. Let's talk a bit about, though, the market we operate in and why we see this market as such an interesting place to be. I think it's important to remind investors why Bigtincan exists and what is it that we do for some of these amazing companies that choose to work with us to create this experience for their teams. We believe that by engaging customers and empowering sellers, we can create that buying experience of the future that really recognizes what our new world is creating. The importance of remote work, the connection with digital experiences are only useful if they're creating an experience for buyers, for customers, that provides them real value in that engagement. And our vision is empowering everything we do here at Bigtincan, and it's building our view of how we can extend and expand our marketplace. Now, in terms of some of the key investment highlights on slide 8, look, I think some of the ones that are important to investors when we think about understanding the Bigtincan business, first of all, is attractive unit economics. We talked about some of those metrics again previously on the financial highlights slide. And the company's continued to perform well, demonstrating its ability to be able to grow effectively and make sure that we're delivering those unit economics that can give investors a view into the potential opportunity for this company to deliver similar results at scale. And our single platform approach using our multi-hub product offering makes Bigtincan unique in the market. We're able to bring together the capabilities that our customers need in that single unified platform. And we operate in a large total addressable market space. And that means that we can bring this solution to a whole range of customers in different industries. And we'll talk more about some of the success in different industries this year. Now, in terms of company snapshot, I think one area that may be worth spending a little bit of time on is that market that we operate in. We've talked a bunch of times to investors about why we believe this market will present long-term growth opportunities for Bigtincan. And whilst we have passed that 1,000 customer deployments mark before the Brainshark acquisition, which now brings us closer to the 2,000 mark, That opportunity, we believe, is still strong for us. And we continue to see ways that we can expand the market space into which Bigtincan operates. And if you look at that market detail a bit deeper, what you can see is not only has Bigtincan been successful in the traditional sales enablement platform market, the sales engagement platform market, and the sales coaching and training market, together with the Brainshark acquisition, we're adding access to the sales intelligence market, a market that's predicted to grow to $3.4 billion by 2024. When you think about these different market sectors, it gives us confidence in planning the future of the company, ensuring we can bring the right combination of those products to our customers as they need them. Now, one of the things that I thought was very helpful in our first half FY21 results deck was this slide you see here on slide 11. And this is the diversified recurring revenue base. It's really interesting. We had a lot of great comments from investors about these 4 donut charts that we used in that first half FY21 deck. I think this period, they give investors even more of a view into the development of the Bigtincan business. Let's have a look at some of these charts. Let's start with the first chart on the left-hand side. This is the ARR by vertical at the end of June 2021. Now, what you can see there are the traditional markets Bigtincan has been strong in. Life sciences remains our largest single vertical, technology, manufacturing, financial services, telecommunications. But what you can see is the retail market recovered well for us in the second half of FY21. That number in the first half was less than 10%. So what you're seeing is that some of those market sectors that were struggling is showing in the numbers that they are looking at reinvestments. And that's really positive, I believe, for Bigtincan, also for our overall economy. The second donut there is our revenue by location. And yes, the company continues to derive most of our revenue from US domestic engagements. But I will remind investors that many of our customers that are buying or transacting in the US are deploying globally. We continue to have users in now more than 55 countries around the world that use our technology every day, but many times that is transacted in North America. But I do believe we'll see continued growth in places like Europe as it starts to recover and take advantage of the opportunity as the market continues to come back to maybe some kind of more normality. Recurring revenue, 97%, non-recurring revenue, 3%. We've continued to see trajectory towards increased recurring revenue percentage in our business. That's totally normal in a growing enterprise SaaS company. And the donut on the right is an interesting donut too. This is the same one we used in the first half FY21 deck. And this talks about the split across the different product offerings that we bring to market. We spoke before about how Bigtincan is pretty unique in bringing together that combination of different kind of product offerings. Now, if you look at that chart and you look at the darker orange part of that donut, which says content, that was really the beginning of Bigtincan's business. That's how we started. And if we went back to our IPO in 2017, that would have been 100% of our little donut there. What you can see is the company has realized the importance of the platform market. We've continued to invest in bringing platform solutions to our customers. Now, one of those sections in that donut is the section that's talking about 2 or more modules. And that's where customers are buying 2 or more Bigtincan capabilities. Now, at the end of December, so for the first half FY21, that was 20%. As we stand here at the end of FY21, it's now 27%. So that's strong growth. And it's showing again that the strategy of bringing this multi-hub solution to our customers is working. And they're supporting that by buying more combination module solutions, even as our overall growth was pretty significant in the period. But of course, all that is all driven by the team at Bigtincan. As I mentioned before, we have an amazing team of human beings all around the world. And in FY21, we worked incredibly hard to make sure that we were making the investments in that team to enable our company to scale. And those investments started with ensuring that we were bringing the skills to our leadership teams all around the world that they need to be able to help us to drive the growth of this company, but also to individuals in the business. We conducted a range of training sessions that were designed to ensure that we had the leadership team in this company ready to scale. We also worked really hard in FY21 to engage and connect with every human being at Bigtincan to ensure that we could build their personal and professional development. It's one of the things that is just is so enjoyable to see human beings that work at Bigtincan and see their careers grow. And our ability to grow those people and ensure that there is at the same time a reduction in bias in how we treat those folks is a really important part of of our commitment to all our people here at Bigtincan. And the third pillar there is really investing in data and analytics to make sure that we are delivering equality and consistency in our reward and remuneration programs. This is important to us, and it's challenging on a global basis, but we believe that the work we're doing there will make every human being at Bigtincan feel confident that they're being treated fairly and equitably. Let's dive into the finance section and give you a bit of a view of some of the detailed numbers for FY21. Look, let's just start with revenue and ARR. You can see some of the growth numbers there. ARR up 48% versus PCP and revenue up 42%. Consistent trajectory of growth in both ARR and revenue. We break down that ARR into the organic component and ARR that joined through acquisition this year. You can see we achieved strong ARR growth both through our organic programs as well as through acquisition. And that's pleasing too, you know, that we're able to generate those levels of growth across both our organic growth engine and take advantage of market opportunities to conduct smart M&A that brought that technology, people, and often customers into our network that we could bring other technology to. And this is a feeder for how we think about those different capabilities where we can start to deliver that 2 or more module sector to even more of our customers all around the world. Lifetime value, we talked a lot to investors about lifetime value. You know, at Bigtincan, we use this metric to give us a really good view overall of how we're progressing. And you can see our lifetime value there at $122 million of LTV in 2021. So that's a nice, pleasing result, up to 376 at the end of FY21. And of course, now with the Brainshark acquisition, significantly more. But just again, demonstrating to the marketplace that the company is able to consistently deliver these strong growth metrics and to do that with gross profit margins and MRR retention that drive that LTV number. Subscription revenue growth, again, these two little lines here, the purple line is our subscription revenue and the orange line being the cost of revenue. And you can again see the simple goal of the company is to make that gap as wide as we possibly can. And what you're seeing is that we're consistently able to scale the delivery systems that power our software. Now, of course, we continue to make investments in the cost of revenue line, ensuring we have the very best technology around the world to help our customers. In FY21, we made ongoing investments in Europe to ensure that we had the highest quality data services for European customers that need to be sure with GDPR and other European data laws, very confident that they can work with Bigtincan. So we've made those investments, and I think we'll continue to make them at the right level. But I do believe this kind of indicates to investors the company's ability to be able to continue to scale our growth in subscription revenue whilst doing that very cost effectively. And one metric that we use, again, you know, when we think about our business, compare it to the very best, you know, sort of US listed companies, one of the metrics we like to talk about is remaining performance obligations. You know, I think this gives folks a bit of a view of we call this revenue visibility. You know, RPO is a SaaS metric that takes the deferred revenue, which you can see detailed in the appendix, and adds the value of contracted revenue that is yet to be invoiced and earned in future periods. And you can see here that RPO for FY21 was $42 million, up 28% from the previous year. Again, demonstrating that Bigtincan has a substantial amount of revenue momentum for the FY22 period. All right, let's talk about something else that I think gives investors a bit of a view of the performance of the company. This is what we call operating leverage. Operating leverage gives investors a view of how the company is performing from an efficiency point of view. Again, you can see our purple line being the revenue of the company, and you've got the orange line being sales and marketing spend, and the sort of yellow line being product development. And what you can see across the bottom is a little table talking about the progression of those lines. And it's certainly one of our goals to try and optimize the way we think about the different spends in the company. And you can see sales and marketing has consistently been trending down as a percentage of revenue. And what that's showing is that the company is getting good at being able to understand how to structure our teams to get the most possible leverage from the investments we're making in sales and marketing. Product development down a little bit over previous year, but you can see we continue to invest in product development. We think that's a very smart investment. It's going to power our ability to take advantage of other areas of leverage across the business. And in total, sales and marketing and product development as a percentage of revenue, 93% for FY21. Again, just a really pleasing number and demonstrating the company's focus on ensuring operating costs are maintained. Talked a bit about ARR before. I like to break that down for investors to give you a bit of a view of the complete flow of ARR across the year. One of the things many investors asked us to do was also look at how we think about both the MRR retention rate, which we talked about before as in straight numbers was 89%, the net retention ratio, but then also look at that from a constant currency basis. And these numbers are very pleasing. Net retention on a constant currency basis, 109% for the year. MRR retention on a constant currency basis, 90% for the year. And you can see that the company's ability to be able to consistently expand significantly more, in my view, than churn is a great indication of the programs that we put in place here to offer increasing value to existing customers so they can see the ability to be able to grow. What you'll also notice here is the impact of in a way you could think of it, that COVID 3 quarters, if you like, whilst our expansion revenue was a focus of our business. We mentioned that to investors during the COVID year that, we wanted to make sure we were optimizing the use of our technology with existing customers. So that 8.5 number in expansion is really pleasing. But what I can confirm to investors is that in that most recent quarter, we did see a change with more new logo deals coming. And that's pleasing because today's new logo deal is tomorrow's expansion. So we think that's an important metric. Cash flow movements, lots of detail about the cash flow movements. Happy to take any questions on that. We provided extra detail this year to investors in our Appendix 4C for the full year that details comparative quarter cash movements and gives you a bit of a view of how that fits across the business. But as well as the program we have to generate that organic growth and to build the core platform we create here at Bigtincan, as I spoke about before, we have implemented a program whereby we can take advantage of our strategic position to conduct M&A, or we can add people, technology, market sectors, and opportunities to be able to grow. And as a company, we've continued to run those programs over the last few years. And in FY21, we conducted 4 acquisitions: Vidinotti, ClearSlide, Voice Vibes, and Agnitio, all adding fantastic human beings, great skills, cool technologies that are already being brought to our entire customer base and contributing to that 2 or more module growth that you saw in our donut slide. But I think as we think about the future of this company, and I'm sure many of you have heard about it, but I wanted to spend a few minutes today talking about the Brainshark acquisition and why we're so excited about what this acquisition is bringing to Bigtincan. So the Brainshark acquisition lifts Bigtincan to $119 million plus ARR leader in sales enablement. Brainshark is an industry recognized and multi-awarded leader in the field of sales coaching, learning, and readiness. And that technology is added to Bigtincan's existing position to create a category leader in one of the fastest growing markets in enterprise software today. In this combination of Bigtincan and Brainshark, it accelerates our ability to scale. It brings new technology, it brings a customer base, and positions Bigtincan now as a scaled market leader on a global basis. I spoke about it before, but Brainshark also brings a core of amazing humans and some amazing technology to our platform and enables us to create new product offerings that we can bring to existing Bigtincan customers, but also Bigtincan offerings that we can bring to that Brainshark customer base. And again, I think our efforts in FY21 demonstrate the ability of this company to be able to execute on that cross-sell, upsell opportunity. And that customer base that's coming enables us to deepen our penetration in our diverse industry mix, bringing long tenured customers and that opportunity to extend that cross-sell and upsell now to around 2,000 customers. So obviously the Brainshark deal brings Bigtincan to a new level of scale. At the completion of this acquisition, Bigtincan is a $99 million in sustainable ARR company with a growth focus for this acquisition. And we expect to grow more than $20 million in ARR in FY22 alone due to this acquisition and the existing growth plans we have at Bigtincan. And it gives us that core technology ownership in that growing market space. So how does it fit? Well, the Brainshark technology fits in a range of areas. It adds a new readiness offering to our existing multi-product platform. And it also adds depth in areas like learning, coaching, and training. We spoke about being the category leader. We think that growing market leadership is going to add real value to investors in Bigtincan. It gives us that cross-sell, upsell opportunity, which generates not only increasing ARR, but also stickiness in customers. And I think, importantly, the CRM scorecards product, which was launched by Brainshark in the 3rd quarter of calendar 2020, so a relatively new offering, brings us access to that new sales intelligence market, which gives us new revenue opportunities, as well as differentiation. So overall, the Brainshark technology is adding to the existing Bigtincan platform. In terms of some of the financial impact of Brainshark in FY22, I mentioned FY22 alone, you can see some numbers here on top of the chart talking about Bigtincan's planned net organic ARR growth, combined with the ability for us to take the Brainshark business and see it grow as well. So we're talking about a net organic ARR growth position of more than 20 million on that $99 million starting base. So again, this is a deal that's around growth. And we believe the combination of these technologies, these customers, and these humans will give the company an opportunity to be able to grow further into FY23 and beyond. But as well as providing that growth opportunity, there are opportunities to drive synergies and benefit from integrations. So we see opportunities to be able to drive both revenue synergies within the readiness business itself, as well as cross-sell and upsell in addition to the existing growth plans we have at Bigtincan. When you combine that with the synergy areas, and we've detailed some of the specific synergy areas that we expect to realize in FY22. One example of that, and those who attended our Investor Product and Technology Day, which was held earlier this year, would have heard about our partnership with Amazon Web Services. And the strategic partnership with AWS enables us to bring cost benefits directly in the delivery of services that will be provided by the Brainshark technology. So there are some real savings in terms of the operations of the company. But a range of synergies we've worked through with as part of our program. We think that will add value to Bigtincan in FY22. So what does that all mean for the future? Where do we see the growth of this company and where do we see the business moving? Well, certainly with Brainshark, Bigtincan covers the end-to-end needs of sales enablement and buyer experience management. And we expect to be able to grow our business along two vectors in FY22. We expect to be able to expand and add value to those existing customers in existing markets that we know well today. But we also expect to be able to grow in new geographic and vertical market areas where we can bring the entire Bigtincan platform to new logo customers in FY22. So what does it mean for our outlook? Obviously we see opportunities to be able to build on this space, but as we go into FY22, the combination of that focus on winning new customers, growing existing customers, making the investments in technology we need to maintain that leadership position we have. And of course, whilst we do not have any planned M&A at the moment, where there are opportunities to be able to add cool technology and things that bring forward opportunities to add value to the Bigtincan solution, we'll consider those. So target $119 million of ARR and revenue $109 million plus with stable retention for FY22 outlook. So that's it for the formal part of the presentation.
Thank you. Well, so that's all we do have time for today. Thank you for joining us for the Bigtincan Holding Limited full year 2021 results webinar. A copy of today's recording will be available on the Bigtincan website. And if you have any questions, please feel free to reach out via the details on the bottom of the ASX releases. But thank you.
Thank you, everyone.